You're listening to Seattle Real Estate Podcast.
Americans' inflation expectations soar to new high as consumer prices surge. But don't worry. We are told repeatedly by everybody from the president on down to the chairman of the Fed that this inflation, it is one word. Now I hear this word is being kind of retired, but the word is transitory. We've got some transitory inflation here, meaning it's going to be here for just a little while. We're in a transition period. When this period is over, the inflation, it'll subside. I'm sure it will. I mean, you pump a few $1 trillion into the economy, what could possibly happen? Transitory inflation. It's going to go, polls go up, polls go down, inflation goes up, inflation goes, things go up and down. We're just at that going up period right now. So what happened? We had the consumer price index numbers came out last week. They were a little bit higher than we're used to. And my big thing is, okay, those numbers don't really reflect what's going on with a lot of the stuff that we're looking at, like housing, gas, food, cars. I mean, those things have shot up in value, and so many commodities have wildly shot up because so many different various reasons. But we're in an inflationary period, and I don't think it's transitory. I think it's going to go for a while. But in order to do that short-term thing where we make everybody feel good, transitory. That's the word we throw out. All right, let's jump on in. But before we do, if you're new here, welcome. My name is Sean Reynolds. I own a couple of real estate companies, and I read the news from that perspective. Let's go. And why are we talking about inflation on a real estate podcast? Well, it has to do with the ability of consumers to have purchasing power. And when they start losing that purchasing power, they can afford less house because houses are increasing more than their income is. It's not a good thing, but don't worry. It's transitory. If you're out there looking for a house and you see house prices going through the roof, don't worry. Believe that it's transitory and go with that and see how that does for you. Now, this inflation is going to go for a while. It just is. There's no way around it, right? Americans' inflation fears accelerated again in November, climbing for the 13th consecutive month to a new record high, according to the key Federal Reserve Bank of New York survey published Monday. The median expectation is that the inflation rate will be up 6% 1 year from now, the highest level for the gauge since its launch in June 2013, according to the New York Federal Reserve Survey of Consumer Expectations. Inflation expectations over the next 3 years fell slightly to a median of 4%, a drop that was precipitated by responses from those without college degrees. It marked the first decline in 6 months. So we've got some expectations. People are like, oh, maybe it is transitory. Maybe we're seeing some stuff go on. But man, everything I see leads me to believe, we got some inflation here and it's going to go for a while. It's going to have some legs. Median inflation uncertainty, or the uncertainty expressed regarding future inflation outcomes, increased at both the short and medium term horizons, with both reaching new series highs, the survey said. Survey says inflation rising. That's what we've got going on. With consumers braced for the highest inflation levels in nearly a decade, they're also expecting the price of things like food, medical care, and college tuition to rise over the next year. But Americans said they expect gasoline and medical care to get cheaper over the next year. They think that rent will remain unchanged. Rent will not remain unchanged. Rent will continue to go up. I don't see how anything can drop. I don't right now, given the circumstances of our marketplace. Gasoline, that does get monkeyed around on its own. Yeah. Throw a few million barrels in there and we'll just, expose those to the market. We'll just see how that goes. Oh, price change? Shocking, right? Medical care to get cheaper over the next year. Really? Okay. That's one that I missed. I don't think so. Rent unchanged. okay. I don't think so. I think you've got things going on with the real estate market. They're going to make it even worse. But we can talk about that down the road after it's been proven that the inflation is not transitory. The report is based on a rotating panel of 1,300 households. So again, these are just people kind of indicating how they're feeling about things. How do you feel about this transitory inflation? Well, the survey plays a critical role in determining how Fed policymakers respond to the recent inflation spike. That's because actual inflation depends, at least in part, on what consumers think it will be. It's that whole, all right, if you think it's going to be that, then policy kind of dictates what happens. And it's like the article says, it's a sort of self-fulfilling prophecy. If everyone expects prices to rise by 3% in the year, that signals to businesses that they can increase prices by at least 3%. Hey, we're just keeping up with inflation. Nothing to see over here. Plus, it's just transitory. I mean, transition time. We're in a period of transit. We've got things going on, mainly prices going up. But don't worry, they're going to go back down. Polls go up, polls go down. Workers, in turn, will want a 3% raise to offset the rising costs. Yep, there we go. And that triggers everything, right? And then you're off to the races. And we've already been triggered. Not triggered like, oh, did you see that happen? Triggered in the standpoint of this is already happening. You've already got inflation going. And it's going at much greater rates than I believe what we're being told, period. I mean, major mainstream media, would they lie to us? Would they do us dirty? I think they might. Oh. This is about well-anchored inflation expectations, Fed Vice Chairman Richard Clarida said during a question and answer session at the Cleveland Fed 2 weeks ago. Getting actual inflation down close to 2% is going to be an important part of keeping those expectations anchored. Good luck with that. Maybe you can Mickey Mouse those numbers around and get it back down to 2%. But real world, we're not seeing anything close to that for a while. That's my opinion. And you're listening to the Seattle Real Estate Podcast. So, take that with a grain of salt. I'm just telling you what I think. Fed Chairman Jerome Powell has already signaled the U.S. Central Bank may speed up its withdrawal of pandemic support for the U.S. economy in order to combat inflation, which has been higher and longer lasting than policymakers initially expected. Hence the term transitory. We're in a transition period. This could change. This will change. That could mean the Fed's bond buying program ends sooner than expected, potentially leading to a faster than expected interest rate hike. That's what we're looking at. We're looking to see what the Fed is going to do. And with the inflation at the rate that it's going, I think you're going to see much sooner than we had anticipated. We'll just have to see at this because we don't really know. This is all stuff that's being talked about. And it's kind of like mortgage rates. People think that when the Federal Reserve actually does a rate hike or a rate drop, they think, wow, mortgage rates must have dropped as well. All of this is already built into the marketplace. It's already anticipated. It's like the 3% inflation. Businesses then are going to bump up their pricing by 3%, and employees, they're going to want a cost of living adjustment, a COLA adjustment. They're going to want a 3% bump. The whole thing just feeds on itself, and so the market takes all this information and already kind of calculates it in, especially the mortgage market. And so if something goes against what was anticipated, that's when you have big moves in rates. It's not when the Fed actually does something that they said that everybody kind of predicted they were going to do. That's already been priced into the marketplace. That's been priced into mortgage pricing, mortgage rates for weeks, sometimes months in advance. And it's when you get we changed things up a little bit. Instead of us doing this, we did this. That's when the market, which doesn't, any of these financial markets don't like uncertainty. So if you do a 1/4 point bump or a 1/4 point drop, and you said you were going to do a 1/2 point, then the market will move. The market will be like, oh, hey, we weren't expecting that. We didn't see that one coming. We're going to have to react. That's when you have price movements. But if the Fed basically does what everybody was expecting to do, it's just kind of like, all right, yep, business as usual. And a lot of people don't get that. They're like, hey, mortgage rates dropped, right? And you're like, no. Well, how come? The Fed dropped their rate. Yeah, that doesn't really impact mortgage rates. And then you just have that discussion and you're like, okay, whatever. Maybe you should tune in to the Seattle Real Estate I don't know. You know what I mean? At this point, the economy is very strong and inflationary pressures are high, Powell said 2 weeks ago while testifying at Capitol Hill. It's therefore appropriate, in my view, to consider wrapping up the taper of our asset purchases. How about starting the taper of your asset purchases, which we actually announced at our November meeting, perhaps a few months sooner. All right. So they need to start and wrap up months before they were anticipating. So the timeline is going to get kicked up, is what we're saying. We're talking about that, right? And it's all about anticipation. What are we anticipating actually having happen? A Labor Department report last week revealed that the price of consumer goods rose by 6.8% in November from last year, the fastest pace since June 1982, all but solidifying the Fed's plans to accelerate its tapering timeline. So that's what I was talking about at the beginning of this podcast, the price of consumer goods, the CPI, that index. And a lot of different things go into that index. So, the 6.8%, call it 7%. All right. If that is an actual number, it's the fastest pace that has risen since June of 1982. That was not a good time. I remember being a kid, or I would have been just middle school, and real estate was coming out of a lot of those, the high interest rate period. And my family's always been in real estate, so we live or die by the sword of real estate, the market. So, as a kid, you're kind of taught to pay attention. And when interest rates are high, everybody's just worked up about that. And they're like, can you believe we're living through this? I remember those discussions. Can you believe that the chairman of the Fed's trying to break inflation? And man, Federal Reserve, or the Fed has their rate up at like 20%. 20%, trying to break the back of inflation. Yeah, brutal times. Super expensive. Cost of borrowing money back then. All right, so we've got that 6.8%. The consumer price data with annual inflation reaching a near 40-year high of 6.8% greatly increased the pressure on Federal Reserve to wind down its asset purchase program even more quickly than previously communicated and bring interest rate hikes toward to the first half of 2022. So quarter one, quarter two, bet you we see something in quarter one. Bet you we do. And this was a comment made by Matthew Sherwood. He is the global economist at the Economist Intelligence Unit. The Economist Intelligence Unit. I have not heard of that. All right. But we just read a quote from that guy. So, it's got to be good. It's got to be accurate, right? Nobody in media would lie to us about anything. Everything is transitory. It'll all work itself up. Polls go up. Polls go down. It does not look like, speaking of polls, but not really polls, but the election recall for Shama Sawant, our socialist alternative member, highest ranking socialist alternative member here in the city of Seattle on the Seattle City Council. It does not look like that recall will go through. It's down to just a couple hundred votes. And I think she's going to stick it out. She's going to be emboldened with her policy moving forward if she doesn't get booted out of office. She's just going to, workers of the world unite, do all kinds of stuff. I'll report on it right here in the Seattle Real Estate Podcast. So, there's a flip side to everything, isn't there? So inflation, let's get back to inflation. Namely, how about housing prices? We have absolutely killed that one here in the Seattle Real Estate Podcast. I've talked about that so many times. And, but if you're new here, my thought on it is pricing is going through the roof. You've got historic demand. You've got historically low supply. You've got interest rates that remain low, whether or not that will continue into 2022. We're told that, rates are probably going to stay in a lower range. How high they're going to bump up, we don't know. With the Fed doing what we anticipate the Fed doing, just things could get changed around a little bit. But inflation in general, I only see things kind of, even though it's supposed to be transitory, I only see things kind of going up right now. I don't see, just given what we've just been through with the whole pandemic, I don't see this thing recovering lightly. Oh, we had a global pandemic. We flushed trillions of dollars into the economy. We had some people working, some people not. We gave just literally trillions of dollars, pumped that in. What could possibly go wrong? Inflation. I mean, just simple as that, right? Simple as that. So I think that's what you are seeing on the front end. And I do not have as much confidence as the rest of media does that this is transitory. I don't think a lot of reasonable people do. I think people are looking around going, have you seen the price on this? Have you seen the price on that? Have you seen the price on this? And I've covered a lot of those stories. When you've got slightly used cars selling for less than new inventory because you can actually get your hand on a used car, it exists. You can drive it off the lot. When those are going for a premium over existing, new inventory, you've got some crazy stuff. You've got that supply on so many different things that consumers purchase on the regular. Coffee. I don't drink coffee because I don't like the taste. I don't like the smell. Coffee is up just a crazy number. I mean, the whole supply chain thing is, impacted things. And then, there's things like real estate where it's been just a perfect storm for, creating massive demand for real estate. And we're still experiencing that. I mean, what are we today? We are the 13th of December. We've still got transactions going on where people are multiple bid offer situations. And this is, we're 2 weeks before Christmas. Typically, this would be a dead time period for a real estate business. But both the appraisal side of things and the sales side of things are still kicking along. There are still deals being put together because there's this underlying demand that just hasn't gone away. And so people that have been actively looking for housing that have been just beat out, they're taking this little bit of a lull time right before the holidays, which invariably happens. And they're kind of filling up that lull with, hey, I'm still looking. I still want to get a house. So we're seeing those kind of transactions go on, which usually during this time period of the year, it's things are dead. So you've got things like housing that's just been off the charts. You've got gasoline, you've got food, clothing. I haven't looked at clothing much, but with as many of the dash, break, grab, and dash going on, and the amount of shoplifting going on. Shoplifting has just become a massive epidemic, hasn't it? Even the Fred Meyer that I frequent, I was noticing that this weekend. I was there a couple of times because I was putting up Christmas lights. Long story, that started literally the day after Thanksgiving. No, it didn't because I was gone. Started the week before Thanksgiving. I put up lights. I put up the little clips. And then a series of errors, user error mainly being the Christmas lights we had weren't working out, had to toss them, get new ones, which means we had to re-engineer the whole damn thing. And I was in Fred Meyer a few times, and this is in Bellevue. This is not far from my office here, and wildly different than Seattle. They've got one of their doors is now shut down. Well, they've got a couple of major big entrances like big Fred Meyers do. And one of them's closed down so that they can monitor more closely shoplifting going on because it's such an epidemic for people to come in and steal stuff. And it's so easy to sell stuff on the secondary market. Just open up a little shop online, eBay or Amazon or wherever, and people are buying stuff. It's just, clothes and stuff, that's not where I typically go. But if you're looking for a bargain, you want to get a discount with some clothes that still have their tags on them, I guess that's what you do. I don't know. I typically go to the stores and not some shady online store, but that's just me. I guess I'm not the bargain hunter that I should be. You've got all these different things that, to me, these different consumer items that I don't see. I see some pretty major inflation, and I don't see it being transitory, and I don't see it coming down in the near future. I think this is what you get when you've done what we have to the marketplace. Not saying we should have done it differently. I think we shouldn't have shut the economy down. We wouldn't have, had to flush the economy with nearly as much aid as we did. But what's done is done. We can't really look back. Got to move on, whether you want to be a proponent of that or an opponent of that. I was not a big, proponent of a lot of what we did during the whole pandemic, but, it's done now. And so now we just kind of need to watch. All right, that happened. What are we doing here moving forward? What does the market look like? And as many times as people want to say the word transitory, I'm not really seeing that happen. So I think we've got a period of inflation coming up here. And I think a lot of other people agree with me. But, the only way to tell is to kind of wait and see, look and see. I'll be covering this pretty closely because this has to do with a lot of what can people afford, because so many of these components, I was watching a quick segment with Tucker Carlson. I don't always watch him. I look to see what the highlights are from the Fox channel that carries his broadcast. I look to see what the topics are a lot of the times. But he was talking about, and I actually watched this one, and it was on inflation. He's like, hey, if you're driving to work, and if you've got a pretty good sized drive to work, and you're dependent upon those gas prices, you're going to have a big hole in your budget where you didn't have that hole a few months back, 6 months back. Gas prices weren't these high. You're going to be looking at your budget going, oh, so I can afford quite a bit less. And that has a huge impact on the housing market long term, because I think so many of these factors are impacting things. And yet the housing market, man, it seems to be unstoppable right now. And that's when I cringe. That's when I'm always like, okay, what are we doing? This doesn't make any sense. I was talking with a mortgage broker that I have dealt with for years and years and years. And it's kind of like, all right, you're seeing all these things go on in the marketplace. And are we just that old where we don't understand the way things work anymore? Is there some of that to how all this goes? There's probably a little bit of that. But there's also that, hey, the last time I experienced this, inflation went up and went up for a while. There was no talk of transitory. It was just, this is what you got. Here's where you are. Got to deal with it. Yep, it's going to have an impact. It's going to have an impact on people's pocketbooks. That crazy thing that we used to have, there again, I'm just really old. Now it's going to impact your crypto. It's going to impact your Bitcoin, because those are going to fluctuate and go up and down. And yeah, there we are. So to me, inflation, yeah, we got to keep a close eye on that bad boy, because it's here. I think it's going harder than we're being told. But, it's transitory. So it's going to come back down, because that's literally what transitory means. It means there's another time out in front where it'll come down, and I'll be waiting for that. You can check right back in here in the Seattle Real Estate Podcast as we see these stories. But maybe don't check in for a few months, because then we'll have a on that topic. I want you to check in every day, because we've got content coming out twice a day, Monday through Friday, and once on Saturday and Sunday. But enough of that. So, yep, I will be covering this actively, because this is something that impacts people's ability to buy housing. And we are the Seattle Real Estate Podcast. Yep. All right. Thanks so much for being here. Thanks so much for supporting the Seattle Real Estate Podcast. I will catch up with you soon. Until then, do stay safe. I'll talk again. Bye for now.